In Singapore, we have a very unique monetary policy framework. It is exchange rate based rather than interest rate based like most of the other countries. This exchange rate based system has served us very well over the decades since it was started and put in place in the early 80s.
The excitement was there at that time. So everybody was looking ahead, looking forward. When can I move? I want to see my new office, the new building. Yeah. Our first impression of the MAS building was, wow, it really looks great. 30 stories building, and it stands out in between the building around it at that time. So it was actually a great feeling to see your own building there. We have a home to call our own now.
The Asian financial crisis took place in 1997 and 1998. To have a financial sector that is overly dependent on the banking system is a vulnerability. As such, we started a conscious effort to develop the bond market in Singapore such that corporates would have an alternative funding source to meet their needs.
When we were first formed, we were called the Financial Sector Promotion Department, FPD in short. So we started with a grand total of 12 staffs in 1998. The biggest challenge, I would say, was fostering mindset change for both our internal and external stakeholders.
1 year after we set up the development function in MAS in 1998, there was a discussion internally in MAS, and it was decided that we needed to have better outreach, because one of the functions really is that you want to attract international financial institutions to either set up or grow and expand their operations in Singapore. And it was felt that we needed an on-the-ground presence in some of the major financial centres.
At a more personal level, I think what gives me immense satisfaction is to see good jobs created for locals through our development efforts. I think this is where my officers and I found great meaning in what we do.
In 2002, BCCS merged with MAS to become a full-fledged central bank with full currency issuing function.
The impetus was because at that time we were liberalising the financial markets in Singapore, and given that there were going to be more innovative products coming out to the market, we wanted to encourage creativity in that aspect. So given that, we felt that Singaporeans really needed to become more competent and learn a lot more about financial literacy so that they will be equipped to figure out what products would suit them, to be more confident in making financial decisions which will really impact their day-to-day lives.
We introduced the $10 polymer notes. We picked $10 as the first denomination to go because $10 was widely used as a denomination for payment, and at the same time it was widely dispensed via the ATMs and also accepted at the cash deposit machines.
So after the TDSR was introduced, there was a gradual correction in property prices alongside flatter growth in transaction activities, and more importantly, besides the numbers, we instilled in our financial institutions the importance of prudent credit underwriting. In addition, we also stemmed impulse buying from buyers and encouraged property buyers to think more long-term.
To date, we have about 121,000 investors in the Singapore Savings Bonds or SSB program. I think launching the SSB product was a meaningful project because it has a direct nexus to Singaporeans in general.
The group main objective was to create policies conducive for bringing innovation to the financial sector and also improving the digital infrastructure on which the new financial sector will ride on, and build a new set of innovative products to support the digital economy and a smart nation strategy for Singapore. The Singapore FinTech Festival was a crazy experiment. We actually never imagined that this will turn out to be such a big success for Singapore.
The admission of the digital banks is a natural next step in the liberalization journey. So in 1999, we started off by admitting more foreign players into our domestic market. And now we are admitting players with a non-banking background, so they can be technology companies that have proven to be effective in their own field to enter the banking market, and therefore bring with them a different value proposition to the Singapore market.
So digital banks will have quite different risk profiles from our existing banks and will present challenges for supervisors. Supervisors will have to pay attention to the risk models that they build, which are untested, and we'll have to see if they are reliable across an entire business cycle. Where there is great talent, you learn a lot from your colleagues and your peers and working together. It is also a place where we put the interests of the public and the economy at the heart of everything that we do.
Dear MAS, it's been a great 15-year journey with you, and on this, your 50th anniversary, I would like to say very happy birthday.
MES has done very well in the last 50 years, and I hope MES will continue to grow and innovate for the next 50 years.
50 years old is a great place to be. Happy birthday, MAS.